Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, February the 8th. The year's 2021. Let's talk trading. Looking up and down. And you know what? I need to add something here because I do have Walmal on the line. Because the other day we were talking about looking left because somebody wanted us to go into that just a little bit more. So hopefully we've helped the traders with the looking to the left. So now we're going to talk about looking up and down. But first, just remember these videos are for educational purposes only, and your results may differ from mine and from Walmal's. So that being said, Walmal, what do you see above? What do you see below?
Right now, what do I see above? I see that we put in a 3-bell up there, up above us, and and there's we got an area up there where a lot of people looks like they went and sold off. So it wouldn't surprise me that we go back and revisit that area. Not sure if it's going to happen up, but it wouldn't surprise me that we do it. And that's just what's above our head right now. But at the same time, who knows? That's trading, right?
Yes, that is trading. So you're talking about the 1 minute chart, right?
Yes, sir.
And the 3-ball, that's the 3-level ZZ semaphore, and we can see we just put in a 2-ball. So we're at the top of the hour right here. So we're hitting the Walmal line at the 40.
Yep, we're hitting that right now, and let's see, we're about 13 seconds into the new hour. I'm actually switching over to my Walmal chart so I can go and see what's going on there. But yeah, so I mean, it looks like there would have been a nice trade. You could have gone and taken a long right there. It's nice it was stayed under it for the open. You would have to have been quick, but you could have been out right now with 5 pips or 4 pips, I guess.
Wow.
But still,
well, it's 3 pips on my chart.
Yeah, mine. On my chart with my broker, I could have been up 4.2, 4.3.
Yeah,
so,
and I've got 1 ball. Do you have a 1 ball at the top now?
I have a 1. Yep, I do have a 1 ball on the top. So it just shows you the difference of brokers, though.
Yeah, and one of the things I do, like usually if I'm in a trade and a 1 ball appears, a lot of times I will exit. I'll leave pips on the table, but it's all those times where I've seen a 1 ball and it's reversed on me that's got me call it gun shy.
Yeah, we've all hit that, where it just hits that wall and bounces right off of it, and that's just the style of trading that you tend to do and I tend to do, and there are other traders that would stick in that trade and say, you know what, that's just market movement, and that's okay, and they're willing to suck it up, That's not my style of trading. I'll just be honest with that. It's the type of thing where I go and I get up 3, 4, 5 pips, and I see that the market comes to a stop, puts a 1 ball in there. It's like, you know what? I'd rather take that money off the table and put it in my pocket as opposed to waiting to see if it goes on more. And recently I've been doing a lot more with taking half the trade off. Leave some of it there, but at the same time take some of it, pay myself as they go and say. Put part of it in my pocket, leave the other part, move break even up. That way I don't have to go and worry about taking any loss on it. Now, the problem with that is that a lot of times you wind up only making half as much as you could. But there's also times when you can go and make a bunch. In fact, I had 1 trade today where I was able to make a bunch because of just employing that method.
Yeah, I guess you'd have to kind of look back over your trades and go, now, had I not taken half off and taken it all off, what would I have made versus what would I have missed?
Exactly. And that's just part of it. The part of what we have to do as traders and figure out, because everybody's style is going to be just that much different, and because of your style and the way that you're trading, that's going to make a difference. If you're waiting for to go and find that nice bottom there, and or a nice top, and you're looking to take like a rat reversal out of the top, you may want to go and actually go and stick the whole thing, because you got a really good chance that maybe you can do an end-to-end run on it and make a ton of pips on it. I'm not looking to do that type of a trade. That's just not the type of trading I do. I'm looking for the little micro movements in between. Get to 1, 5, or 10 pips in between.
Right. Now, since we're talking about looking up and down, above and below, what else do you look for above and below other than just one balls, two balls, and three balls?
I look for a couple things. I look for hourly closes above me or below me to see if there's, if we're going to go up, is there going to be some type of resistance that I'm going to hit on the way up? I also look for closes on the below me as well. I look to go and see where has price, had a problem in the past above me or below me, because those become areas of concern, areas where price may want to either go to or will be rejected out of. So, this type of thing where if I see that at a particular level, every time it gets to that level, it just goes and pops off and pops off and pops off. In fact, you see that, if you look at the 48 level, 74, 37.48, if you notice just to the left, we had, it just popped off. Every time we hit it, it seemed to go and just drop down below. We only had, we had two closes, above it, but all those other closes, as soon as it went above that 48 level, it just dropped down. So that tells me, that's an area that, it's has pretty well said, you're not going above here. We're not going to let you get above here. And that creates a situation where, if I'm getting up there, let's say if for some reason I got a signal here to go long, as soon as I got to the 48 level, I'd be looking to put my finger on that close button, just to exit out very quickly, because, it could pop right off of that pretty quickly.
Yeah, so I can see here we haven't had very many closes over 37.50.
Yeah, and that's another one. There haven't been very many there too, so that's another level. And you got to look above you and look below you. Where has there been problems? This whole idea of knowing where price has been, where it potentially could go. I mean, it's the type of thing where water doesn't run uphill. So look for look for the easy ways. Look for where if you got lots of white space on your chart, meaning that there's space on your chart where price is. Every time it's gotten to that area, it just continues to run. Take advantage of that. Run it to where it gets to that top area where it runs into a problem, and then look to get out. And it doesn't mean that you immediately exit out. It means that when you get to that level, look to see what it's doing. Did price hesitate? Did it come to a complete dead stop, or did it bust through it? If it busts through it, there's no reason to get out. But if it's hesitating or coming to a complete stop, you know what? My finger's on the button, ready to go and pop out as soon as I can, just to put some of that money into my pocket instead of being in the bank's pocket.
Right, exactly. So I think you had mentioned something about a rat zone end to end. So right now we're in the upper rat zone.
Exactly. Today's range is 69 pips. So for me, that's a little, on a rat trade, that's a little condensed. But at the same time, there's still room in there. You still got room in there where you can go and take a rat trade. So if you get a really good signal up in this area, it could be a good place to go and do it. And the only thing I would be doing is that if you look on the chart, I'm not sure if your chart has this or not, as the hourly closes, we got close after close after close all the way back down to where the open was. So it's one of those things where you got to be a little bit careful, because it could sit there and get you stuck. So but at the same time, it's the type of thing, if you're aware of that, that means that, hey, I can pick up a pip here, a pip there, and just keep on going and taking a pip here and there and just play it that way. Even on a day like, today, we've got 69 pips on the day, and I've got a ton of pips. I've probably got about 40-something pips for the day, something like that. And none of my trades were really big. I had one trade that was like 7 pips, I think. All my other trades were somewhere between 1 and 3. So it just shows you that you can keep on hitting it and hitting it and hitting it. And that's on a day like today where you're ranging in a pretty tight range. That's sometimes what you got to do.
Right. Now, for the past couple videos, I talked about, these order blocks, because a couple different traders sent me some PDFs. So I wrote a bunch of indicators, because writing indicators helps me understand the method. And right now on the M15, we are in a buy block. Now, some people want to say, but this is actually a bearish, it's a bearish block, but it's a buy block, because the candles that the last up candle here, that's where the block is. So that's why it says BB, but it is a bearish block. So in here, you definitely want to sell out of this block. And so what happened was you had a bull candle here followed by a bear candle that closed below the low of the bull candle. That this pattern right here forms that block. And so what does price do? Well, it'll move away out of that block, then it'll come back into it, and then that's when people want to trade south. And of course, you could put your stop loss, a few pips above that area, looking for, to minimize your loss. But as you can see here, it came back and touched it. Now it's heading south again.
Yeah, and that would have been that's another idea about, looking up and looking down, because you look up, hey, right above me, there's an order block above me. That's going to tell me, hey, I need to go, there's a good chance this thing is going to go down. It may go back up into it, but there's a good chance it's going to come down, and price will come down. And if you would have taken that price, I'm looking at the chart right now, I probably would have entered somewhere around 43 or something like that.
Because you're on the 1 minute.
No, actually, I switched over to the 15-minute.
Oh, okay. I'll switch back.
But I would have entered on somewhere around 43, 42, and the reason why is because going back 2 candles, the one candle before where the 3 ball is, I would have cleared that wick, okay, coming out of that block, and you could have picked up 4.5 pips on that deal. Would have been a very nice trade.
Exactly. Some people will poo-poo 4.5 pips, but if you're trading $100 a pip, that's folding money.
That's $500 in your pocket. It's $1,000,000.
Right.
That's the car payment.
So, we've talked about now the 3 balls or the semaphores above and below. We've talked about highs and lows. Now we're talking about these order blocks. But also things like, previous opens, previous closes on daily, weekly, monthly, to get a bigger picture. So, you can go all the way out to the month. And let me just show everybody something here on the Sweet Spots Gold indicator. If you switch it and it goes crunchy like that, come over to Auto Adjust and set that to true. And then on the higher time frames, it'll space these much higher, so you don't get those lines all crunched up. It's funny, on the Walmal lines, if you go to the monthly, he got a buy at 1.4 and a sell at 1.3.
Yeah, that can happen sometimes,
Right.
That's, doesn't happen very often, but it certainly can happen.
Yeah, so, so you look above here, you can see there hasn't been too many closes up here. Then you come down to the weekly, and you can see where we are here. And we've got the weekly Walmart lines at 1.37.
Yeah.
And then if you come down to the daily, you can see here we've got a 1 ball on the top. And there was a 3 ball a few bars ago on the top. And that's a nice little pattern where you go 3, 2, 1 or 3, 1, 1. And then you look for this price to reverse if it doesn't move the 3 ball from here to here.
Yeah, the other thing about looking up, it's really a combination of looking up and looking left at the same time. But if you look at that weekly chart, you look at how many wicks, there are on the top side right now, and it just tells you that prices, it's not convinced that it's going to go up, but it's testing the waters up there. And so that gives you a clue as to what's happening. Now, the thing is, in terms of making money, how do you make money off of that? When you look back, just almost every single week going back for like a month and a half, it goes up there and spikes pretty high up there, and then it comes back down. Well, maybe I can go and say, hey, this looks like that we've now hit the top for the week because we're getting signals that's kind of indicating that. Maybe I can go and run that back and get, if you're one of these traders that can hold on to a trade for a while, maybe I can go and pick up, 30, 40, 50 pips on that trade, just because of that's the pattern that's there. And that's part of that pattern recognition, because that's one of the biggest things about trading is not just having the method, but also having some type of pattern recognition.
Yeah, and the fastest 15 minutes in trading is over. So we'll continue this later in the week. So fellow traders, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the TheRumpledOne, over and out.